Aaron Tattersall here with another episode of At the Table with AgRisk Advisors, where we discuss timely and relevant issues challenging the ranchers and farmers we serve every day. You'll be hearing from industry experts and our advisors as we examine risk management programs to protect your legacy.
Welcome to another episode of At the Table with AgRisk Advisors. My name is Bret Gum, an advisor with AgRisk, and I am joined by Brent Young, an agent with CSU Extension. Thanks for being on today, Brent.
My pleasure, Brett.
So Brent has actually been on with us before when we were talking about the ARC versus PLC decision. And so, Brent, for those that didn't listen, could you just give us a little bit of background on your work with CSU?
I'd be happy to. My official title, I'm a Regional Extension Specialist. My area of specialty is agriculture and business management. I'm located in the Northeast Region Engagement Center in Sterling, Colorado, and cover pretty much the northeastern part of the state. In addition to my work with CSU, I'm also an active farmer. I farm in partnership with my wife, my son and daughter-in-law. We have an irrigated farm north of Sterling where we raise corn, sugar beets, alfalfa, and soybeans.
Well, that's awesome. We're happy to have you on, your wealth of knowledge. And so today, we're actually going to be talking about really using your crop insurance policy to leverage your operation. You know, the producers I work with, a lot of times we're just focused on, the coverage, how many dollars we're getting on, what's the premium going to cost, and that's all very important. But I think there's a hidden aspect of crop insurance, and that's really utilizing those guaranteed dollars to leverage other parts of your operation, like financing or grain marketing. I think there's a whole area that a lot of farmers don't utilize. And so, what are your thoughts on really just leveraging that policy like that, Brent?
I think it's a really good point. It begins with knowing your cost of production. I know we're going to explore that in a little bit more detail later on in the podcast, but basically, if a producer's got a good handle on their cost of production, both variable costs, which most of us do a good job. We know what our seed costs, fuel, those input costs, we know those pretty readily. Where we have issues would be the overhead costs, those fixed costs, and how we allocate those among the various enterprises on our farm. So if you have a really good, complete cost of production per acre, then I think you need to take that number and compare it with the various coverage levels, and as you mentioned, the guarantees through crop insurance. And we need to look at crop insurance, in my opinion, as a dynamic product. It's not a static product, so to speak, where I just simply ask my crop insurance advisor, how much insurance did I have last year? How much have I had the last 10 years? I'm just going to go with that same program. We really need to look at the merits of what's happening year to year. And I think that's especially important in 2023. I think it'll be important in the crop year 2024 and possibly 2025 because our input prices are so high. And so knowing that cost of production per acre, what it would take in coverage at a coverage level to be able to take care of a majority of those expenses for the 2023 crop is probably very different than what happened in 2022 or 2021. And so I think we've got to look at that every year. Build a good budget early. Take a look at what revenue guarantees our crop insurance policy is going to provide for that particular production year and make the decision based on those factors.
Yeah, those are really good points because, like you said, we've seen higher grain prices the last couple of years, which is great, but those input prices have went up right along with it. And so just being able to really hone in on that and really know your numbers as far as what your costs are, how do you see that once you get to those numbers? How do you use that compared to your crop insurance coverage to know kind of how much extra coverage you can use to kind of like we're talking about here is leveraging the other side on, like, let's say grain marketing?
Well, see, on the marketing side, the equation is a little different in that what we're looking is, instead of possibly the guaranteed dollars per acre on input costs on the financial side of it, when we're looking at crop marketing, what we really need to look is the bushel guarantee. Based on my APH, based on the percentage of coverage that I might select, how many total bushels can I guarantee? And then that provides a target number for the total number of bushels that I might pre-harvest market, because depending on the method I use, I may be using a method such as forward contracting that has a delivery clause. I'm expected to deliver the number of bushels that I've contracted. So in that case, it's important that I have that bushel guarantee through crop insurance to make sure if I had some kind of a production hiccup and my yield is not as at the level I'd hoped for it to be, I have a shortfall, I can have the financial backing to make up those lost bushels. And so that's critical to that forward pricing, pre-harvest pricing strategy that I'll put in place. That's very important to be able to do that. Let's use corn as an example. I can go back through history and I can know that 3 out of 4 years, the price of corn during the growing season is going to be significantly higher than the price at harvest. And so what that tells me is the market is giving me an opportunity to pre-harvest price that crop at an advantage. And I want to be able to take advantage of that. And so again, the best way to do that is to make sure that I've got that bushel guarantee backed up by crop insurance to allow me to effectively forward harvest price my product.
Yeah, and I think, again, this is a tool that hasn't been utilized enough because, we are in this market, we are price takers. But if you can be able to manage some of that risk and forward contract during the growing season when, statistically we're going to get better prices, that's the way to do it. But out here where most of my guys are in, eastern Colorado, where we're both at is, the yields are so variable. Who knows what we're going to have here? And so, it can get a little scary when we get to that harvest time. We don't have those bushels to deliver. And so being able to utilize that crop insurance policy to still be able to forward contract and get those better pricing, I think is huge.
Oh, absolutely. I know in our own operation, it's part of our marketing plan. When we put together that marketing plan, and typically we start thinking about it as soon as we've completed corn harvest. We're thinking about marketing the next crop. The first thing we look at is, what level of crop insurance do we think we're going to be looking at? The first round of that might be based on our financial needs and our budgets, but then we combine that with, how much crop would we like to have that opportunity to forward harvest price, and that becomes a line right on that marketing plan. So, that's the maximum we're willing to pre-harvest price. We know that up front, and then that allows us to develop our price and date triggers. And then, the key to a good marketing plan is not only developing the plan, but it's executing it.
Absolutely.
And so having that peace of mind to know that we can execute that plan, it makes you sleep a little easier at night.
Yeah, and that's important in this industry. So when you're marketing this, are you, kind of your strategy on this, are you willing to go up to that full guarantee on the insurance policy, or is there kind of a certain percentage that you're comfortable with, going to on those coverage dollars?
We're comfortable going right to the brink, so to speak. We'll go ahead and market it, and we have in a number of years we've marketed right to the bushel guarantee, and so we're quite comfortable with that. We've had years where for whatever reason, our yields weren't as good as we had hoped, and we were short. And so we had that crop insurance contract or policy to backstop that, and we were able to purchase grain in the open market to either fulfill a contract, or in some cases it might be a situation where the grain merchandiser that we have a contract with would have a penalty on a per bushel basis. So rather than making up the crop bushel for bushel, we may pay a penalty of so many cents per bushel not delivered. But in any case, we've got that crop insurance policy to make sure we're able to do that.
Yeah, and that's so important. And so when you are doing that, like let's say we have a plant price of $5, and we have a run up in the market, and let's just say it goes to $7. Are you looking at the total bushels that are covered to be able to go up to that, or are you looking at the total coverage dollars when you get those difference in prices?
I tell people to look at bushels. I mean, we typically focus on bushels when we're marketing. It's a little easier for us to deal with. Again, if you're in a situation where you're going to have to replace crop that you can't deliver, you're replacing bushels. And so where I do look at crop insurance on a dollar guarantee per acre when I'm putting that budget together, when I'm developing a marketing plan and incorporating crop insurance as part of that marketing plan, I'm looking at a bushel guarantee.
Okay, yeah, no, that makes sense. And so, when we are utilizing this, what are some of the things? I mean, we're talking about the benefits of it, and it's a great tool. What do the producers need to be aware of when they are utilizing this way?
Well, again, you need to be very clear about what your guarantees are. Obviously, as you look at the various levels of coverage, that's going to be very transparent. You're going to know that. So you want to keep that in mind. Again, both the dollar guarantee per acre on the financial side, the bushel guarantee on the marketing side. So you need to be taking a look at that. I think the other thing is, as you mentioned, as we started this podcast, it's very easy for us as producers to really get caught up on that premium cost. And we've done the same thing. And as we obviously increase the level of coverage, the premiums go up. But I think you really have to balance that with two things. How much risk protection am I buying on the financial side? And how much opportunity am I purchasing on the marketing side? And in that case, I think you're going to find that you may go for a little higher level of coverage to be able to backstop both of those concerns. And I've seen producers who are maybe well suited financially. Maybe they have their land paid for, they may have the bulk of their equipment paid for, and so they might opt for a little lower level of insurance because they don't have that risk out there. So looking at the cost of production, that dollar guarantee per acre, maybe they can weather a little bit of a storm, but then they want to be very aggressive marketers, and they may not want to be in a position where they have to foot the bill for a shortfall in a deliverable contract. And so maybe financially they could take a little bit more risk, but from a marketing standpoint, they want to be more aggressive. And so in that case, they may look at having a level of coverage that's higher than what they might do just simply looking at it from a financial aspect. And so I think that's the other thing that you need to consider is crop insurance obviously is a backstop for financial risk protection, but we need to look at it as an integral part of our marketing plans as well.
Yeah, absolutely. And just being able to, capitalize on that is just so important in this industry. And so in kind of going back to that type of operation you were talking about, in that situation, I recommend to a lot of my guys enterprise units. That's a way. So basically, enterprise units is going to be a county coverage. So by crop in practice, all of those crops will be looked at together for loss purposes. So by doing that, you get a significant premium discount, but you still get those. You can get higher coverage dollars by doing that. And so a producer like the one you just talked about, that can be a great way to get those extra coverage dollars while keeping your premium still fairly affordable.
Yeah, that's an excellent point. And I think one that producers need to look at is what are the options available to, reduce the cost of the premium. And as you mentioned, if I can reduce that cost, then maybe I can afford a little higher coverage. And, that's definitely a benefit to my marketing plan and also provides, again, some more protection on the financial side. So I would encourage producers to spend some time with their crop insurance advisors, It typically it can be, it's a phone call, quick phone call. What did I do last year? Let's do the same thing this year. I encourage producers to go in a little bit more depth and maybe start the conversation a little earlier than we do in the season. Spend some time in the office. There are a number of good online tools provided by land grant universities to analyze crop insurance decisions. Utilize some of those. Think about how it fits into a marketing plan. But I think we need to be very deliberate about our crop insurance decisions, and unfortunately, sometimes we're not.
Yeah, and that's so true. And with looking on the financing side and looking at your coverage each year, the financial side is huge because if if you have an operating loan or you're financing inputs through a co-op, a lot of times they're going to want to know what your crop insurance is, and a lot of times I do assignment of indemnities with them saying, you know what, we'll go ahead and give you this credit, but we want that crop insurance backing, in case things go south. And so that's a huge part of it too. Each year that you need to be talking to your lenders because they won't forget about it. So to make sure you're getting that credit, it's very important to make sure you're staying on top of your crop insurance.
Oh, absolutely. And I think, I think you'd be hard pressed to secure an operating note in northeastern Colorado without some level of coverage. I mean, it's just a given. And so I think most producers understand that. They're familiar with the product. It's just maybe thinking about it in a little different terms. The other thing that's been quite interesting the last several years, we've actually had some opportunities to pre-harvest price crops, corn, for example, in November or December. And so if you're coming to the table to renew an operating loan, and in addition to having an adequate level of crop insurance on the financial side, you can say to the lender, hey, I've already pre-harvest price X number of bushels at this amount, and look at my budget. That's at a profit. And I feel comfortable doing that because I intend to take out this level of crop insurance. So that's another thing that's really positive. If you can go into that meeting with your lender as you renew an operating note, and if the year has provided that opportunity or you're pre-harvest priced a portion of your crop at a profit, that helps as well.
Oh, absolutely. And lenders love that. They want to take as less risk as they can so they can mitigate some of that by you pre-harvesting. They'll take it all day.
You bet.
And so, what's some tools? We have some tools that we have for our producers and be able to analyze that coverage, analyze premium. When we're talking about these things, how are we going to market this year? How are we going to get lending? And so when you're making those crop insurance decisions for that, what's some tools that you refer people to kind of take a look at that?
So a couple of land grant universities that I think do a really great job in providing crop insurance decision tools. Iowa State has a tool online, and usually you can just simply Google crop insurance tool Iowa State. It'll take you right to it. University of Illinois has a site called FarmDoc, FARMDOC. They have some really good tools there, and I tell people to bookmark that site. I think that's an excellent site to get not only the crop insurance information, but also a lot of other tools. And those tools are Excel based, so they're fairly user friendly. So those are a couple that I encourage people to look at. The other thing that a lot of people don't realize is out there is, the Risk Management Agency, RMA, the USDA, has a couple of tools. One is a premium pricing tool. And I'll use that when we are putting together our budgets for the next year. We try to do that, again in that late November timeframe. And although we've not, obviously gone through the price discovery period, which happens in February for spring planted crops, I can get a fairly good idea of what that premium is going to be, and it will produce, my part of the premium as a producer at various levels of coverage, various types of insurance. And so that's another tool that's free. It's out there. And although it's not going to be exactly to the dollar what you're going to pay for the premium. It's close enough that I'm comfortable plugging that in for budget purposes. Also allows me to do some what ifs in my budget. If I, select a different level of coverage, I've got a corresponding premium amount that I can plug in.
Yeah, those what if scenarios are huge. And so those resources that you talked about, those are great, for you guys listening. Go check them out. We also, for us at AgRisk Advisors, we have some software tools that we developed, and specifically on those what if scenarios. We kind of have an idea when we're going into the season. Okay, things can go this way, or this way, and just kind of playing around with it. Okay, what's the worst case scenario? What's the best case scenario? And so we have some software as well that really takes a look at that. And I've seen it be very beneficial to producers, just to kind of put pen to paper on that and really analyze what could happen this year.
Yeah, the more information you can get, the better. And I always recommend that producers look at a number of different tools, compare what's out there. Each tool may have a little different method of making an analysis. So run several of those. And again, I think we need to be deliberate with our crop insurance decisions and spend some time in making a good informed decision.
Well, Brent, I appreciate you being on here. Is there a way that producers can contact you?
Absolutely. I'm going to give you a couple of methods. First, probably the easiest is via email. My email address, all lowercase, Brent.Young. So that would be Brent.Young at Colostate, COLOSTATE.edu. And then my phone number, 970-580-2204. The other thing I might mention quickly, Brett, is when it comes to calculating our cost of production, we have a really good tool, and that tool is on our ABM website. I'm just going to give you the name of the tool, and if you'll Google or search, the tool is EPIC, EPIC. If you would go EPIC ABM, I believe it'd probably take you right to the website. But that's a great tool to help producers calculate cost of production, including both variable and fixed cost.
Yeah, those tools are huge for everybody listening. Go check those out. The more resources that we can utilize, the better. And so, if you also have questions for me, my number here, my cell here is 620-952-2343. And my email is Bret, Bret.Gum, Gum, at cropins.net. And you can also reach us at our office. Our office number is 303-539-9300. Well, I thank you, Brent, for coming on. We're always appreciative of your time here. And thank you guys for listening to another episode of At the Table with AgRisk Advisors.